All right, guys, how we doing? Happy Friday. Of course, if it's Friday, we're going to take a look at Bitcoin. Of course, right? So, I thought we'd try something a little bit differently today because we are still at a point where, we've been through enough Elliott counts up here, and I until we get a break one way or the other, I just think this is very much open to interpretation. We need resolution one direction or the other before we can really definitively come back here and say, okay, I see what happened here, what we have. So what I thought I would do is see if we can take a look at this without any Elliott wave, or let me say it this way, with as little Elliott wave as possible. Now, I say that because when you've been doing this as long as I have, it's almost impossible for me to look at a chart and not see 3s and 5s. It's just jumps into my brain. But I wanted to do this to show you a couple of reasons. One, to show you that Elliott wave it's optional, or as I like to say, it's not essential for success in trading any market. It can be helpful. I use it all the time, right? So I find it helpful, but there are times where we've done a couple of videos this week where it's doing more harm than good because it's just creating paralysis of analysis. So what I thought we would do is, one, demonstrate this to kind of solidify that idea that it is not mandatory, it's optional. Some people get very hung up on it and think, that is the key to it. And I would tell you you're chasing an illusion there. It is not a panacea. It can be helpful, but it's not. You don't need it. So I thought we'd do this, as I said, with as little Elliott wave as possible, because now we will, and I'm not abandoning the Elliott wave count here, but when we come back to this, when we get some resolution here, we'll ultimately be able to put a count on this that we can lean into based on the resolution that we. But right now, it's a crapshoot as to what we've got here. So let's look at this just as how someone would approach this if they weren't using Elliott wave. All right, so I'm just going to focus on geometry and the fib relationships, or the algo plays that we talk about all the time. So the most rudimentary thing we can do is just work from swing low to swing high. All right, so in its most basic format here, in terms of how we would analyze or describe what we're looking at, we've got, well, let's call it a swing. I almost said an impulse. We've got a swing here, so swing low, swing high. We're in the midst of an internal retracement, right? And pretty much everything you see, if you just, let me open this up a little bit. If you looked at this with that mindset, come here. I can open this up here a little bit more. I'll just use this tool here. Really, what we have here is just an ongoing series of internal and external retracements. Right? So here's the first move, internal retracement. All right, now we passed that low, external retracement, but still internal. Or you could think of it. Let me get that to stop. You could think of it. Okay, well, there's an external retracement in the confines. I'll just use the most recent swing low to swing high. That's an internal retracement relative to this swing. So internal, external, same thing happens here. This is internal to both of these pivots, right? These are higher highs. Internal. This is internal to this swing. Then we go external, so we get an external retracement here, but it's still internal here, right? So it alternates back and forth. Internal, external, internal, external. Right? That's really what creates Elliott waves. Right? We're going to act like we don't know anything about Elliott waves. So if I'm looking at this and I'm not trying to apply any Elliott wave, I'm just going to focus on what I know is the foundation of what moves the market, and that's the fib relationships and the geometry of the market. Well, so with this established here, so the next thing I'm going to do is just kind of the more obvious potential resistance points, right? So we can use, in this case, we're going to use the pivot swings, highs and lows. So just keeping it simple, right? So this clearly, right? That was the market paid attention there. How about we say it that way? This looks like it potentially could be a factor. So you could think of it this way. We just connect these two and we'll create a little support zone here. Now, it's in the context here, we can look at, well, what else is here? Well, this was some sort of a cluster here as this area right here relates to what we see over here in the volume profile, right? So we can see we get a little bit of spike here that's relative to as we stayed there before we went to the parabolic move. I'm going to take this off here just to declutter the chart, but that's kind of you get the basic idea here. We have a zone of support. Now note that's also right here as we sit at the 50 of the swing low, swing high, which we know is an area the market pays attention to, right? Whether you want to buy into the idea that there's software there to buy it or not, we know this is an area the market pays attention to, right? It's just simple 50% retracement. So if I'm looking at this and I want to start applying some geometry to say, okay, well, I've got to start here. I'm clear on this concept of internal and external retracements. I've got a dominant low to high. I can see where my 50 and my golden zone is. Okay, so how can I apply some geometry here to help me get a sense of where the market is going to be definitive about what's next, right? So right now it's hard to analyze it, right? Because if you're thinking in terms of internal and external, well, the last thing we have here is an internal retracement. I'm getting ahead of myself. Let's just try and apply some geometry. I'm going to keep it simple. We're just going to use channels. So when I'm looking to apply channels, I'm looking for my eye immediately. I'm looking for two pivots that look like an angle there might have been there might have been some influence to the market. So that's maybe harder to say than it is to show you. So let me do it this way. So I guess the most obvious thing that we see, if we were just thinking of channels, is well, let's connect the two highs here. This looks like that could be interesting. All right, so let me get that tightened up just a bit. All right, so we've got three pivots here, but note here we don't connect the four. So in a perfect channel, you're connecting, right, all four pivots, or even additional pivots as the market moves. So I look at that and I go, well, that's certainly one way I could apply it. Excuse me. But I could do it a little differently as well, right? It's just as valid. So I can look here and go, well, those two pivots look like that could be of importance. So I'm going to put that here and connect the third here. I'm going to change that color just so we go to white here. Let's make that, I'm going to make that a little fatter. Yeah, there you can see it a little bit better. Let me do the same thing with this. Okay, let me fatten that up so you guys can see it better. Okay. All right, so I've got two channels. Okay, so both equally valid. Which one am I going to use? Well, I want to start looking for any technical significance here. So I can say, well, I got to pick one. So one thought is you leave both of them on, right? Nothing wrong with that, right? See which one is most influential as the market either ramps higher or heads lower. That's certainly one reasonable approach to it. And I don't know that I would discourage you from having it somewhere where you've got both of them on there. But I think we can be a little bit more precise about looking for technical pivots. Now, when I describe a technical pivot, I'm looking for something that's either very precise with regards to a fib relationship, or could be something as simple. We could call this a technical pivot because it responded to the resistance here. So support, resistance becomes support. But we can do better than that. Let's go to our fib tool and just take the very first thing we see. All right, so if I get that right on it. So you can see it right here. So swing low, we come back, right? Just standard, like bread and butter algo play. We get between the 50 and the golden zone. We come down, algo target to the tick. So we know we don't have to wonder. We know we've got a technical pivot here. All right, so all right, we certainly want to use this one. Okay, now same thing over here. I'm looking, so what else can I look at here? Do I have a technical pivot here? Well, I've got this one identified. So I'm going to take this one off so we don't just end up with too many lines. We can't see it. So I'm going to mark this one. All right, so I got a technical pivot here. All right, so is there anything here I can lean into? Well, let's just go take a look. All right, so just from my swing here, the first pivot here, it looks too narrow, and I don't hit anything precisely here. So I only get a 38. So I'm going to go a little further and see what happens if I come down here. Well, that looks interesting. Now, granted, as relates to an algorithmic play here, either, right, they used the 38, right? So we lean into the idea that this is an algorithmic play because of the reaction at the target, not what's happening here. So if I just swing high, swing low, we come back to the 38. Note we can also come right to the Vegas wave, and then I come down, I get another to the tick algo target. and then the reaction. So this is technical, this is technical. Oh, and by the way, we've got this pivot here. So this pivot and this pivot are definitely important to me. Right? I know the market responded there. I know there are algorithms that are involved there. I know I've got the most obvious thing being the structure sitting right here. So I definitely want to pay attention to those two pivots. So if I'm choosing between these channels, which one do you think I'm going to use? Right? So I'm going to pull this one off. Now, again, there's nothing wrong with keeping that on somewhere, and that might not be a bad idea, but I've definitely got two pivots here that I know the market has responded to. I've got two technical pivots. So before I move on from that, I want to, is there anything more I can stack into these pivots to give me more confidence in their significance? Well, of course, this would be just the first things you would do, looking for swing relationships. From the swing high here to my, now I confirmed technical low. Well, I'm going to go up and take a look here and see what I get. So if I get get right on it. Okay. So I look here and I go, okay, that would be very common if we're just thinking of this in terms of swing relationships. I almost caught myself putting some Elliott in there. But if we just look here at swing low, swing high, I'm just looking for that alternate relationship. Very common for the market to respond to parity here. So the length of this swing from this, so we're not quite to 100%. But then I look at that and I go, well, given the fact that I had an algo target there, I've got this structure here, perhaps that's why we don't quite get to the 100. It's close enough that it gets my attention that it could be a front run, right? There's a number of different things that could have been going on here, but right, I don't want to lose track of that. So this is telling me that it's one more piece of the puzzle here to suggest that this is an important pivot beyond just the obvious reaction that we get here at the resistance. So I'm building more confidence into that pivot, right? And its importance. So now I'm back to, so what else can I add here? So I got one channel here. Is there anything else I can do here? Well, so immediately, again, in terms of looking for, your eye kind of looks for pivots that looks like they could be on an angle, could be related. So just the most obvious thing that I see is just connecting these two pivots right here. Right? So we know this one, of course, right here, this was important here. So I'm going to pull back to here where I know I've got a technical pivot. So I'm trying to construct here, almost like they're freeways here. I'm looking for intersection points. Now, note what has happened here. So by connecting here, these two with this pivot, look what it gives me here. So this, yet again, becomes all the more significance. Now I have the intersection of two channels at an algo target at former structure. So this pivot is really important to the market. Okay. Great. Now, so let me get that out of here. So I can look at that and go, all right, well, then same process here. I kind of look here and go, well, these look like there's a bit of a channel right there. So I'm going to do the same thing here. I'm going to change the color here, but it looks like I got another little internal channel there, just connecting those pivots here and then the next pivot high. Now I'm going to, let's put that, we'll go to purple there, right? So this, let me make that smaller because it's less important to the market. It's an inside channel. So I've got, is that going to be too, let's see, you guys can see it here. Let me, can I get that brighter? Let's do it. Shit, hang on. It's right there. That's not even better. I just want you guys to be able to see a little bit. Okay, that'll work. All right, so, and I put it almost in a lighter color just to de-emphasize, right? It's not as important as the other two. So lighter color, thinner lines here, but I don't want to lose track of it. So if I look at these three pivots, you could think of it as trend line here. So I've got a trend line that's being supportive to the market here. So if we're going to go up from here, right? So this is an obvious place where I'd be looking for an intersection of all of these channels, right? So this becomes important to me. So I look here and I think, okay, well, the depth of this retracement is, so if I'm just thinking in terms of the algo play, right? So swing low, swing high, I've broken the 65. So I'm losing that algo buy support from this pivot. Well, now we can look at prior pivots here, but I don't. What I want to stay is relative to what's happening right here. So I don't have an algo position here, but I can, looking up here, I want to see, well, if I get there, Is there any other intersection of technical confluence there? So now I'm starting to look for, can I project up here? Well, so I'm going to do the same thing here. I'm going to take this pivot, which I know is important to the market, to the first drive higher, and then I'm going to put this right on this little pivot here. So I've got, here's my 100, so I'm going to fatten this a little bit. So here's my 100 and my 127, very common targets here for the swing relationships between alternating pivots. Right now, again, I'm tempted to want to talk in an Elliott context here. But if we just think about potential areas that could be, now we could get here in this time frame, right? So it doesn't necessarily have to be related to that intersection here, because we get an intersection here. So this could move this just slightly to the side and thin it out a little bit. So I still want to pay attention to that, because you see I could push up here and get this. I could come up here and then bump into this channel. So I could hit here, I could hit here, but this is an area. So I guess in the context of just trying to lay it out, I would pull this over and say, this is an area I want to pay attention to. If we're going to come up here and challenge this, right? Get on the edge of this channel, get on the edge of this channel. I want to pay attention to what happens here. Now, where would that be in the context of, so remember this pattern here that I talk about all the time, right? This retrace here. After we get that alternating pivot, if there's an algo play here, I want to pay attention because I know that they're very responsive to that. So with all of that established, I'm going to leave that little box there, knowing that we could hit, we don't know when, right? We've got multiple intersection points. So I'm going to see, well, what if we get up there, would there be any potential algorithmic activity up there? Well, look where that lands. I'm literally splitting the 50 and the 618. Interesting, huh? So if we get up there, right, if we come up here towards this, that is screaming at you an opportunity to be a seller, because look where the target is down here, right? And look where that lines up with that channel. Now, is it going to be that precise? Well, we don't know. Right? Here would be, oh God, that would be just a technical big O there. Getting all of that intersection at the golden zone with this as a target. Right? So you could put it down here to the next golden zone. That wouldn't surprise me in the least. Of course, to get there, you're going to have to get through this algo target, right? Which, look here, look at the volume. This is not point of control, but you've certainly got a volume. Is it? No, it's not. But you've got a volume spike here. So look, could be here, could be, we don't know, right? Here's the center line of that channel, right? Could be here. That's putting it out there in September. But I'm just trying to get these kind of pathways for the market. I mean, we'll use channels. And then again, remember, I've got this internal channel. Well, right now I'm dealing with, I always encourage you guys you've got to ascertain what the algorithm did last, right? Well, now out here at a 3 hour, let me clear this up a little bit. We are still dealing with the last algo reaction, which is right here. All right, so secondary pivot here, but of this swing, we get this swing down. We come exactly to the tick to a 50. Right? Look where that target is. All right, so to get to that target, well, first I'm going to have to get through this 50. I'm going to have to get through this structure. Remember when we started, we drew this little area of support here, right? Just connecting that prior swing high with this swing high. Well, right. So I'm going to have to come down here and I'm going to try and challenge the underside of that. Could be that we don't get there. Could be it's a front run. Could be the 50 holds it. But this whole area, so if I wanted to be more precise, I might do it this way. And say, okay, well, this one's already been tested. So if we're going to come down here, we're going to break this pivot. What's the next thing I'm going to run into? Well, the 50 for sure, but then you can look here and say, okay, well, I've got this structure here, and I've got an algo target here. So this is, if we're going to resolve lower, this is definitely an area we want to be paying attention to. Right? And then look how, remember we looked at those two pivots, how they were both technical, how that trend line here, if we were to hit, right, come down here and come right at that algo target, at that trend line, OMG, that is, I mean, I want a piece there. Right? I'm not gonna put the kids' tuition money into it, but I definitely want to pay attention there. I'm at this prior structure here. I've got a big volume node here, so I know size. Whales will look there and go, they can hide some volume there. That sets me up. So what does that set me up for? keeping the Elliott out of it, right? I got an algo target up here. What's that? 16.5, let's call it. Very reasonable. So, but right now, the dominant influence in the market, since I have no technical pivot here, what's dominating the market is this algorithm that's sold here at that 50, and that is a 50 to the tick. So only one of two things happen here. Either this gets its target down here, or we come here, this structure is going to hold it, or this channel is going to hold it, and we're going to resolve up. If we resolve up, look what we're going to run into. All of this resistance that we just went through laying out here, the alternating swing, the straight algo play. And of course, even if we get through that, then we got to get through one up higher where we have that perfect confluence between the 50 and the golden zone. So to get out of here with a bullish move to go after that from here, starting to look less and less likely. So it becomes an odds play. What are the odds that we do that? Well, of course, it's possible, right? Anything's possible. But if you're looking for path of least resistance, it would appear to me that this is the more probable. And I say that because I don't have an algo here to drive it. Now, again, I don't misunderstand what I'm saying. A whale could come in this weekend and blow the thing up. So it's not that's not possible, right? So if you're trading in here, you're sure as hell going to put a stop on it. But right now, path of least resistance appears to be down, which would imply we're heading down here. Now, so what will be a bit of a tell is, note here, I've got two channels right here. If we break this channel, all right, well, then you're probably drawing another channel. So let me clear this out of here. All right, we're back to, I'm going to leave that box there. So if we're going to come down here, then likely, you just start doing the same thing. Go, well, this is significant. Now, let me get that in a different color. Let's go to put that in green. All right, so now I've got this channel sort of driving me down towards this structure down here. All right, there's our center line, which always pay attention to the center line in a channel. All right, I would consider it just as valid as the median line of a pitchfork. So come down here. If we come down here and catch that middle, well, then maybe we're starting to put that together. Right? Because we know that where we started, right? This dominant, right? This is the dominant swing. This is the internal. So I'm laying out a kind of a roadmap. So if we're going to come down here, it looks like that's the path of least resistance, at least at this moment as I'm recording this. That's setting up that play. And then we could do the exact same thing. If I were to get a technical pivot here, excuse me, well, I mean, I might just from the low here, if I do something along these lines. Now, well, let's change that color. Now I'm going again. Now I've got a new channel, right? So now I'm looking for this intersection. Come here, right? I want that right there, right? Just straight algo play. Nothing fancy. It's just I'm using everything I just took you through, putting all of these channels together, looking for those intersection points of those channels, and then adding the algo swing, right? So if we come here, I guarantee you, don't take my word for it. You could watch it happen. I guarantee you there will be buying interest there because software is going to be sitting there. It's going to start kicking in right as we approach that 50. Does that mean it holds? Of course not, right? We could easily go to the 618. Easily go down to the golden zone. Now we're down here at 7,600. Now, if it starts to get uglier, for whatever reason, right, and we start to come down here, we're going to have a major trend change if we break that 65. Right? Now we lose the buy side algo from the low. Right? I do not think that's what's going to happen, but it sure as hell is possible. Right, so let's put that all the way back together so that you understand why that's very possible. I'm so sorry, guys. Don't forget, right? It's easy to forget, right? That's why you want to keep these. Don't forget what we ran into up there. Golden zone, the 65 to the tick. This was the chance to break that sell side resistance. So just as I know exactly what happened there, if we come down here and challenge this golden zone, I would anticipate the exact same reaction. But of course, could happen at the 50, right? We don't know, right, how strong the market is going to be. In fact, technically, the 50 looks stronger because it now starts to look left, right? So now we get this pivot here. So we've got structure in the same way we had structure right here. So now I've got this pivot here lines me up. If I get right on it, Yeah, that's right on it. It's right at the 50. Right in sync with this little pivot here, which gave me this high volume node here. So if this comes down to this zone, oh, I start buying right there. The intersection of all of that technical confluence, and we haven't even considered an Elliott count. Now, you could just in your, if you want to put the most rudimentary, right, potentially, that's what you're looking at. Right? As simple as the Elliott can be. Swing low. I've got a significant low here. And right, just putting it all back together, you guys haven't forgotten this, right? So here's my technical pivot from the swing high, swing low. Here's the 50. Right? So it just repeats over and over again, guys. I mean, I can show you 1,000 times, right? You've got to pay attention to where that is. You got to know where this algorithm is, or you're blind to the market. So from the 50 here, I come down. I know I've got my technical pivot here, so I go from the target here to the 65 here. Now I'm retracing. So this is an internal retracement to this swing, right? Where's that? That's got it. Well, look at that. So if we put the whole thing back together, right? We come here. Now we've got this. Well, let's see. I got two of them on here. Yeah, I've got all. So I've got the all the way. So I've got two targets down here at. Well, there's 0. You see that? So if I'm using the target from the swing high to the swing low from the 65, that target is 0. Pardon me, it's negative 59. The secondary pivot is minus 809. So obviously, right? These are not going to get met. But you could make the case that technically Bitcoin is on its way to 0. It's hard to argue with that. Right now, but do I think that's going to happen? Obviously, of course not. Of course not. But there's the you could think of it as this way. There's the science. There's the algorithmic fact. We know an algorithm defended there, right? So they're selling. Interesting, huh? All right, guys, I went kind of long there. I think that gives you plenty to chew on here. So it's not so much about the next trade as it is. I wanted to do it this way so that we don't get so fucking caught up in the Elliott count. Hopefully I just demonstrated to you that you do not need it. It's only apply it if it's helping you organize, right? That's how I use it. What do I have here? Can I organize that? But I can organize it just in the sequence of internal and external swings just as well, looking for the fib relationships, looking for the geometry, looking for the channels, looking for the median lines. And then if I get something very rudimentary like this, well, all right, it looks like I can probably count 5 there. I can pretty easily count 3 here. So I've got a real contender for a 1-2. Oh, if I'm going to get, if I know just the most rudimentary Elliott knowledge, and I think I'm going to get a third wave, well, that's putting me up here at 25,000. 1-2, and then of course on top of that, we would just, as we would with any we get something. Let's use the lower one. Oh shit! Now you can't even see it, but. Oh shit! So do you see that? Well, you can't even see it. So here's the. Oh, you're not gonna be able to see it. Well, this blue line here. Oh fuck. Maybe that's too many lines here. I won't be able to talk you through it. But you don't need it, right? You can just use the channels. First target, second target, third target. If we're gonna go 1-2, which is what I think we're gonna do. I think that's what's teed up for the rest of the year. So where's the next opportunity, right? So sometimes I think it's better if I don't come down here and say, buy it here. I want you guys to go through that same process and draw your own conclusions so that you need this counsel less and less and less. That's the goal, right? You don't need anybody's counsel because you can do exactly what I just did. All right, guys, that's probably enough preaching and teaching right there. Okay, we're gonna take a look at the Bitcoin dominance, and if I have time, we'll do dominance without Bitcoin as well. All right, guys, that should give you plenty to chew on. All right, talk to you later.